In the energy quadrant, we did see copper stabilize in terms of price. Last week, we had a close above the 200-week moving average in WTI crude oil. And we've stabilized above $56. We're now looking at 8 consecutive sessions with price above that $56 area. A little bit of a sell-off earlier in the morning, but a rally back as the day progressed, as we saw the S&P reflect risk assets going higher by creating a new all-time high. NASDAQ did the same. Dow fell a little bit short, still a little bit of trading left in the Dow as crude oil comes to a close. EIA tomorrow, the estimates are for a small build. If you look at the overall positioning going into the EIA tomorrow, we've got crude oil itself 3%, the inventories are 3% above the 5-year average for this time of the year. Motor gasoline 1% below the 5-year average. So we're going to be looking at both, but really you still got to focus for this time of year on refinery utilization and where that's headed. 2 weeks ago, we had gone from 86.3 up to 87.7. Last week, we fell back down to 86. We're getting to that critical time where turnaround is ending, and you need to see refinery utilization get back up into the 90s to give the market the idea that short-term demand, at least through the summer driving, with the end of the summer driving season, I should say, is still there. In the past, you have to go all the way back to 2011 before you saw a turnaround not go back up to 90 percentile in the refinery utilization number. For those of you that don't know, again, refinery turnaround is when they shut down parts of a refinery to retool and perform maintenance to produce winter blend gasoline. Again, you always see refinery utilization fall off then and then ramp back up. Going all the way back to 2011, we get back into that 90 percentile level. Haven't gotten there yet. This is the time of the season that we should be starting to climb back up toward 90. And lastly, President Trump's speech to the New York Economic Club was optimistic on trade, but still a little bit tough on China, talking about if we don't get a signing of the Phase 1 deal, we don't get advancements in negotiation, tariffs are going to go up. So risk assets in general kind of paused on that verbiage. It wasn't any sort of negative commentary. It was just that same sort of, we're doing well, but we have to get this going.